Good afternoon and welcome to the Boring Millionaire podcast. My name is James Lamantia and my mission is to not only make you money with the stock market, but to teach you about the stock market so you can make this money all on your own. So today is Saturday, May 31st, and I'm going to start by going over what happened this week, but I do want to answer two major questions in this week's episode. Those two questions are the most paramount towards the stock market and investing. Those questions are, what is the stock market and why would you invest in the stock market? Two very simple questions, but they are important when beginning your investing journey because why would you be investing if you don't know what these things are? So basically to start, this week was a shorter week. It was a 4-day week because of Memorial Day on Monday, and we basically didn't see much happen this week. Tuesday started very exciting. We saw a pop initially at the start of the week, but then in Tuesday's trading, we went higher and higher. And then through Wednesday, Thursday, and Friday, we basically just simmered down, took a breather after that initial pop. And to me, it just makes perfect sense. Last week, we talked about how the market landed on its 1-year average, and I believe that that was going to be a floor. This week had showed us that it did become a floor and we traded above that, off of that mark. So I still continue to think that the 1-year average is going to be the lowest that we see the market go. It's a new trading range that we found ourselves in. So over the past 3 weeks, we basically bounced between 57.50 and 59.50. So just narrowing out in this little range. And once better news and more incentive to buy the market comes into play, you'll see the market continue to go higher. As we've talked about over the past 3 months, basically, there's nothing but positive signals surrounding the stock market. So there's really no reason for people to get timid, get a little nervous, and want to sell out of their positions. And to the contrary, there's more and more reasons why people would want to be investing in the stock market, building and growing those positions, and basically getting involved before the market continues to rally higher. So the only important news we really saw this week was NVIDIA's earnings. NVIDIA was the last of the mega $7 trillion companies to report earnings. They did have pretty fair earnings. It wasn't a knockout of the park like I thought it would be, but it wasn't a disaster. So all good news. And the stock initially rallied, but then basically calmed down and was trading at the 134, 135 price we saw before earnings. So that was basically what we saw this week. Nothing too exciting, but then again, this is the Boring Millionaire podcast. I always chose that name because the stock market not only could be boring, but even within it, there are weeks like this week where not much goes on. So just continue to invest, continue to watch your watch lists, watch the stocks that you're interested in, and we will just be eager to see what goes on this coming week. I do think this coming week is going to be a positive week. I do think if we continue this stagnant breather, we're just going to meet the 1-year average again. So whether the market falls to that 1-year average or we remain sideways with the average rising to where we're at on the S&P 500, either way, I do think the 1-year average is as low as we're going to go. And once the momentum starts to pick up, we will see the market continue to rally, in my opinion. So let's just look forward to the week, see where we go. But within that, what is the stock market? The stock market is, in my opinion, the most inclusive and accessible money-generating machine on the planet. And the reason I put it that way is because no matter who you are, no matter where you are, no matter where your life is and what your situation is, you have the opportunity to invest in the stock market. And with that, you have the opportunity to invest in yourself. As long as you are a legal adult above the age of 18 and have Wi-Fi and an account with a brokerage, you could put any amount of money into the stock market. So with that said, that's why I think it is as accessible as it could be, because you really could be 18, 19, 20 years old, take $10 a week and put it into the stock market. It is a market of stocks, though we call it the stock market. It is the public open market to investing in publicly traded companies. Now, what is a publicly traded company? Well, we mentioned NVIDIA. We could look at other companies such as Amazon, Apple, Visa, Microsoft. But they're companies that are just massively involved in the world that we live in. They create the infrastructure and the proprietary use of things that we see in the world, and they basically mold the way we live in society. Now, I just picked a few examples, but I would say that there's 100 companies that implement that same proprietary value into the society we live in. So where I'm going with that is the stock market is your public market to buy shares of these companies. A share of stock is a piece of ownership within this company. So let's use Apple for an example. You buy a share of Apple for $200. They may have 1.5 billion shares out. Yeah, that's quite a few, but you still own a piece of that company. Now, granted, that one share may be 0.000000001% of the company, maybe even less than that. However, you still own that piece of Apple. You, as an individual, have ownership of Apple. Now, coming with that ownership, you also have a voting say in what this company does. Each share of stock is one vote towards what the company does. Now, of course, there's elected boards of officials and, hired positions hired by the board so that the company could run in a day-to-day manner without us having to vote every single day. But when there's key important decisions to be made, the shareholders are responsible for voting, and with your ownership of those shares, you do have your say in what the company does. Now, to blend into why you would invest in the stock market, one reason to own these companies and own these shares is very many of them pay a dividend. So what a dividend is, it's a quarterly payment to you just for ownership of those shares. So every 3 months, you get paid a little bit of money just for ownership. All you do is own them. Whether they go up, whether they go down, no matter how many you have, you get paid a percentage for the ownership of those shares. So that's how the ultra rich really make their money. Let's say you have $10 million. You invested in the stock market. Now, of course, if that appreciates, you'll see the gains from that. But if you have 10 million, let's just say in the stock market, and you're getting paid 2% a year on those dividends, that's 200 grand a year. So when they say the rich get richer, they're just invested. They're not doing something magic that isn't inaccessible to the rest of us. They're just invested. So no matter what this scale is, we start on a smaller scale. I've started on a smaller scale, but it's to build that portfolio, build that nest egg, and then in turn, that nest egg could continue to pay you basically a silent background income. Now, I use the word nest egg. What I mean by a nest egg is if you are investing this money into the stock market, you essentially have a stockpile of money that continues to grow over time. Now, why would you be doing that? Why would you want that stockpile of money? I think it's simple enough to say nobody complains about having more money. There's not a person on the planet that would turn down more money. But the more practical reasons why you would want that lump sum of money is to protect yourself and your future self from financial needs. We want to own a home. It's basically a human nature need that everybody feels. So investing in yourself and investing in the market could help develop a fund, a deposit to basically get your foot in the door for home ownership. And then on the reverse cycle of it, if you already own a home or you go and get a mortgage the traditional route, you can invest for 10, 15, 20 years, then take that nest egg and pay off your mortgage years and years earlier. You could take that nest egg if you have a family, if you have children. You could use that nest egg to have more accessibility for college opportunities and regular schooling opportunities for your children. Really, money is the median of exchange in the world we live in. So more of it means more to exchange, which means more financial freedom for you. So basically, in summary, I could pick 40 different reasons out of a hat why we would want more money, but everybody has their own desire for wanting more money, and there's nothing wrong with that. I feel sometimes society teaches us that wanting money is a bad thing, and I disagree with that. Money protects us, money gives us the things that we want in life, and money is the thing that helps us give to our children. I bet you everybody watching wishes that they had some sort of inheritance that would make their life easier. There's nothing wrong with that, but if your previous generations did not set that up for you, then it's up to you to be the generation that sets that up for your children. I personally don't have children, but if I did, I would want a better financial future for them. And that is, I think, enough of a reason why you should be investing in the stock market. You are investing in yourself, you're investing in your freedom, you're investing in your lifestyle, and you're investing in a better future for yourself. So I've always been a believer of the stock market. And quite frankly, the whole reason I made this podcast is because I want to convey this information to everyone who listens. I don't want to just make you the money. I don't want to just teach you how to do it, but I want to also just convey the importance of investing in yourself. Only 50% of grown adult Americans are invested in the stock market. And I believe that's an underwhelming number. We should have more people invested. And really, if more people are investing, it becomes a more competitive environment. And stock prices, in my opinion, would go at a higher pace, at a quicker pace, if more people were involved. So I'm just getting into all this because I think it is important for people to be financially educated, and not only in the form of understanding how money works or how to generate money, but understanding how important it actually is. You will need it when you're older. Your family will need it. And as I mentioned, it is the median of exchange, whether it's food, whether it's housing, whether it's clothing, whether it's recreational, whether it's schooling, whatever you're paying for it with money. So you may as well be investing in yourself to have more of it. I would also like to just point out we've been victims of inflation over the past several years. It is finally starting to cool down. But if you're investing in the stock market, you will have your money outpacing inflation. So instead of becoming a victim to it, where your dollar is worth less, you could invest, you could outpace the inflation rate, and then in time, you have your money at a better value than it would be if it just sat in a bank. Now, one point I also want to expand on bringing up the banks is if you have your money in a savings account, yes, of course, you gain interest on it, and they'll tell you you're generating money from having it in there, but it's nowhere near what you would generate in the stock market. The S&P 500 on average appreciates 10% every year. The average dividend on the S&P 500 is 1.25%. So basically, every year you're making 11% on your money at an average rate in the stock market. And that certainly beats the 0.001% you're getting on interest in a savings account. So I do think it's important to keep money saved. That rainy day fund is, always going to be necessary when you have a rainy day. But it is important to be invested and to outpace both inflation and just the stagnant value of the dollar. The dollar has been depreciating since its existence, and it always will be. So another reason to be invested, another important reason to have your money invested in assets that generate you money. I would also like to say one small caveat. I don't want to get crazy on this, but hypothetically, let's say you have a stock portfolio worth $50,000. You've been investing for 7-8 years. You've grown it to this nice amount. Now you need to buy a new car. Instead of going to a bank and getting a loan for that car, you could borrow against your stock portfolio. Now, like I said, I'm not going to expand greatly on it, but you need to manage yourself because if the stock market falls and your portfolio depreciates, that could weigh on your loan. If it goes too far down, your loan could be at risk. But in that $50,000 example, if you're taking $2,000 or $3,000 out against it, you basically loan the money to yourself. And instead of a bank coming in and saying, this is how much you need up front, this is how much you need to pay every month, this is what the interest rate is, you could just borrow it against your stock portfolio and create basically a payment plan for yourself that works for you and pay it back at your convenience. Now, I will say there will be an interest rate on that loan. Anybody who lends you money will have interest on it. That's the nature of why they do it. But it would certainly more than likely be better than the bank. In the examples I've borrowed money against myself, they were better rates than the bank was offering. So another important reason to invest in yourself, and I keep saying invest in yourself because that's exactly what you're doing. You are investing in your own life, in your own financial future, and your own financial comfortability. So you're doing it for you, and there's nothing wrong with doing it for you. So how would you do this? It's not as hard or as tricky as people may think. All you have to do is download an app. We have tons of them on our phone. So download Charles Schwab, download Robinhood, or even Fidelity. I've never used it, but I've heard good things about it. And all three of these apps are regulated by the SEC, so they are watched by the government. There's no funny business going on with these companies. And to just touch on it, I know 4 years ago during the GameStop trade, Robinhood got a bad rap about some of their practices. Although they weren't pleasing to the public audience, they were following SEC regulations, so they've done nothing wrong. And I bring that up because I don't want their name to be stained. These are good brokerages, and they give you direct accessibility to investing in the stock market. Now, what would you do with these apps? You download the app, you make a individual brokerage account, and then you fund it. You could fund it the same day. Sometimes the accounts need a day or two to get approved, but you basically take a picture of a check with your phone on the app, or you could wire money, old school, nothing wrong with that. But you make an account, after you download the app, you fund the account, and then you just go right on, you make a watch list of the stocks you want to be involved in. And if you're watching the podcast, you will have a long list of stocks that are worthwhile to watch. And then when you find an opportunity you want to take advantage of, you place a buy order. You just click buy, you pick how many shares you want. It'll tell you how much it costs, and you place order. And then so long as the trading volume accommodates you, you will have your order filled. Now, when I say that, there is the practical, somebody needs to offer the sale, somebody needs to bridge the gap. You make an offer to buy, they make an offer to sell. But there's millions and millions and millions of shares of all of these companies being traded all throughout every single day. So your order will be filled. No need to worry about that. And another important thing I do love to stress on more than anything else is that any budget could get you involved in the stock market. You don't need to be buying full shares. There's the accessibility to fractional shares nowadays. So earlier we made that $200 example of Apple. You could put $20 in, get 0.1 of a share. And I've said it before, I know that doesn't sound like, you're really going deep in the stock market and you're going to make a lot of money, but it's not about making a lot of money. It's about building that financial future you want for yourself. So 20 into Apple one week, 20 into Amazon another week, 20 into Alphabet the next week. That's going to go an incredibly long way when investing in the stock market. And trust me when I say it, because I've done it, I've lived it, and that's why I'm here to discuss it with you. So going into my $50 segment, I always like my $50 segment because, again, it just reiterates you could get involved with any type of budget that works for you. You could take this 50, cut it in half, go with $25 a week. So we'll just use that for this week. You take that $25 and you break it into $5 increments. And this week, the first stock I would buy is Waste Management. So Waste Management, as we may know, is the garbage company. If you're part of my local audience, I know you have Waste Management picking up your trash. I don't know about other townships and whatnot, but they are a trash facilitation company. They pick up the trash, they own the dumps, and they are leading the trend. They are outpacing the S&P 500. So with that, I do think if the rally continues, they will be a leader of that rally. They pay a 1.37% dividend, so earning that silent background income just for owning the shares. And I love Waste Management because, as I said earlier, we need to invest in companies that basically shape the world we live in and shape the society we live in. Waste Management does so because we need to throw our trash out. There's going to be a need for that forever, and they facilitate that need. I will tell an honest story. I used to be a dealer at the local casino. My shifts would end at 6, 7 in the morning. And on Fridays, I would come home, and as soon as I fell asleep that morning, I would get woken up by the trash trucks coming and picking up the trash. So I said to myself, if this is going to happen to me, I may as well be involved and benefit from it. And that was 7 years ago. I've owned the shares since. They were $63 at that time. They are now $238 a share. So I don't say that to flex. I say that because I was investing in a piece of the world that I was subject to. I wasn't happy with them waking me up, but I realized it was going to happen. It's the world we live in. So I may as well be a part of that. My next stock this week is Take-Two Interactive. So Take-Two Interactive is the parent company of Rockstar, which is the development company that makes GTA. So many of us are aware that GTA 6 is on the horizon. That horizon continues to go farther and farther. But Take-Two Interactive is going to be a huge player in the stock market while we wait for this game. There's a phrase in the stock market that goes, buy the rumor, sell the news. And that's exactly what we're doing here. So we're buying it on the idea that it's going to come out. It's going to launch great. People are going to love it. They're going to be flocking to go buy it. So we're buying that ahead of time. Then when time comes and they actually release the game, you sell the news. The story's already over. That's what we were waiting for. But right now is the buying time. It's sitting right at its 3-month average, a perfect metric that I love to see stocks at when I'm buying them. So with all things said, I'm buying Take-Two Interactive for the ride into GTA 6. My next stock this week is Oshkosh. Oshkosh manufactures a lot of the unique and emergency vehicles that we see in the world. They make fire trucks, ambulances, things of that nature. So a niche in the world that, again, it's something we're always going to need. It's proprietary value in the world and society we live in. And they pay a 2% dividend. So, again, earning income just for having your money invested in this company. And it's sitting at its 1-year average. So it's been bouncing around just around it. And I think if it goes above it, holds it and continues to move forward, this stock will rally. So that's why I'm a buyer of Oshkosh. My next one this week is Apple. I've mentioned Apple maybe more than any other stock on this podcast. But firstly, it's one of the greatest companies in the world. Everybody uses iPhones and basically everything. They've monetized the watches. They have basically the leading share in the watch market. And everything they do well. And I want to be involved in that. And I'm buying it here because the charts are showing me it's in a good position to be buying. And then furthermore from that, Apple is always a phenomenal stock. More times than not, it's running and outperforming the market. So seeing this in a very elongated, stagnant manner, being down hard and, just not finding its feet, I think it's a perfect opportunity to buy because there will inevitably be a day where Apple is outperforming again. So get it now while it's discounted and doing poorly. Then my last one this week is Coca-Cola. So it's fighting the resistance, and what I mean by that is it's pushing into new all-time highs ahead of the stock market as a whole doing so. So every opportunity people had to sell it, they didn't. It continued to remain strong. It continued to hold its old highs, and it's just inching higher. So I do think, again, like I said with Waste Management, once the rally truly begins its next phase, they're going to lead this rally, and I want to be involved ahead of time. Coca-Cola also pays a 2.83% dividend, so killer dividend, better than average, and I want to be earning that income while I'm holding that share of stocks. So another great reason to be involved in Coca-Cola. And just to round everything in, let me be your tool to the stock market. Let me be your guide to not only teaching you how it works, but showing you the tools and signals I look at that make me the money in the stock market. I'm here for everybody. I want to share my knowledge, and not only my knowledge of the stock market, but the importance of investing and the importance of investing in your own freedom. So follow me on Facebook, follow me on Instagram, follow me on Threads. You could always find me on YouTube, Spotify, and Apple Podcasts. And always feel free to reach out with any questions you may have. My mission is to help teach you about the stock market. Thank you.